right? A lot of people say that when you take a look at an AI stock and you value it and you think about it, right? Don't think about it like a software company, right? Where initial costs, you get some programmers, write some code, do it once, and then you just print and copy and send it off, right? So, I mean, even if it's over the air, right? With AI names, you know, every query costs money, costs churn, right? Your data centers need to get to work again, right? So they should be looked at more like utilities. Do you agree?
Well, I could actually agree with both sides of that argument over there, right? Let's talk about the software being dangerous bit. Now, the reason that I've kind of said software is dangerous, you probably remember this phrase from a few years ago, decades ago. We'd always talk about software is eating the world, right? And that was the mantra coming out of Silicon Valley, because the efficiencies that software has given you, you had to go live with them. In some sense, what we kind of think about is happening now is in parts of the software market, you've basically got AI eating software. Right? So it was really interesting when you think about when GPT-5 was launched by OpenAI, they essentially did a real-time demo of what a Duolingo would look like, a language learning app, right? That's a business model that's been around for some time. So what I'm really referring to is the fact that the advent of AI is putting a lot of software business models that perhaps were not thought of as being at risk and saying your barriers to entry are lower. Now, it doesn't mean that comes free. As you said, someone's got to pay for the tokens, got to pay for the electricity, the chips, and all that stuff coming through. But that's where the revenue models come in. So whether it's people like Meta talking about putting advertising onto WhatsApp, whether it's OpenAI and the revenue model coming through. But I think the reason I talked about software being a dangerous place to be is that, again, it's becoming more of a binary outcome for many of the players. If you're someone like a Microsoft that has pretty much, as of now, impenetrable position.
Look, is it as simple as this? Is it as simple as the threat of AI? Because, look, you don't need programmers anymore. You can get AI to write code for you.
Well, you'll still need some programs to do the quality checking, but you need fewer, right? But what I'm saying is that many other business models can now be disintermediated by others in other verticals. So if you thought back historically, you had different verticals in software. Software, SaaS as utility. You had people like ServiceNow, people focusing on banks, IT, etc. Today, you could have someone using potentially an AI-based LLM model come up to disrupt an existing guy like a Salesforce or ServiceNow. I'm not saying it's going to happen in every case, but we're seeing more and more instances. I think that's why you have seen where companies have missed or talked about the fact that their growth is perhaps not as big as expected because of the threat of AI. Those are the stocks that are down 25, 30, 40% upon earnings, because suddenly you're questioning the terminal value of that business model.